Hi friends, once again welcome back to Roji's Share Tips. In today's video, we are going to look at the share analysis of Tata Chemicals. The main reason why we are doing the share analysis right now is this share has gone through a correction of almost 19% recently. Not just that, this share can largely benefit from the EV market boom that is expected to come in India. If you look at the business model, it is manufacturing of basic and industrial chemicals like soda ash, and the company is also involved in the manufacturing of lithium and batteries. The business of making specialty chemicals as well as batteries together has a very good growth potential. The market cap of the company is around 23,823 crores, shows that it is a large cap stock. And as of now, it is fifth largest chemical sector stock in India in terms of market cap. The current market price around 938 rupees shows that it is around 19% discounted price from its all-time high of 1160 happened on 2021 October, that is last month. The book value is around 642 rupees, which is almost 68% of the share price. Shows that your money is very safe in this company. And also we have to note that it is an FNO activated stock, means trading is happening in very large volumes. The face value of the share is around 10 rupees, showing that there is a strong possibility of a stock split in 2 years, considering the fact that the share price also reached 1000 levels. Dividend yield is 1.07, which means that you will get 107 rupees returns per year for every 10,000 rupees invested. Bonus history shows that company has issued 6 bonuses in the past, but the last issue happened in 1995, that is almost 26 years before, and at a ratio of 3:5. So which means there is a rare possibility of getting a bonuses, but we can't expect that. If you look at the 12-month returns, you can see 192.88%, which is okay, very good. But if you look at the 5-year returns, it is almost an average, just 93.79%. But if you look at the maximum returns in 21 years, you can see it is only 798%, just okay. We cannot say this is an outstanding return, it's just an average return. If you look at the inventory turnover, it is around 2.16, which is also low. And the pledge percentage is 0.00, shows that company hasn't pledged any of its shares. Earnings per share is 10.1, which is considered as low because it is only 1.08% of the stock price. If you look at the ROE, it is 1.73, ROC 4.52, ROA 1.43, looks very bad, very poor returns. If you look at the debt to equity, it is 0.43, shows that company has some debt, and it is just okay. Debt to profit is 27.7, shows that they have high debt payments, but still the situation is under control. Promoter holding is 37.98, which is okay. Promoter has sufficient stake in this company to handle it. If you look at the investments of DII and FII, you can see it is 20.02 and 14.45% respectively. Means that the investors has invested decent amount in this company, means it is attractive for the investors. Even though this is the case for the company right now, but still the company is very much attractive for investors. Mainly these financial parameters are coming like this because of the slowdown happened in the market in last few years because of the COVID-19 and not because the company is bad. If you look at the stock P, it is 34.6 against an industry average of 28.1, shows that stock is slightly overvalued, but it is okay considering the possibility of future growth. Now if you look at the last 11 years of company's performance, you can see in 10 years they made profits and 1 year they made loss. And you can also see that the profits are highly fluctuating. It's not growing marginally or it's not going proportionally, it's going highly up and down. So you have to keep this in mind as well. The reserves of the company is 14,035 crores, which has increased from 12,643 crores, shows that company has sufficient reserves to handle economic shocks. The cash flow is showing negative, but we can see a large scale consolidation of debt, means that company is recovering from its debt crisis. CEO and Managing Director is Mr. R. Mukundan or Ramesh Mukundan, age above 42. He is an engineering graduate from IIT Roorkee and he got an MBA from FMS in Delhi University. Working with Tata for nearly 26 years as per the Tata Group profile. We don't know this information 100% correct, but some people say it is only 12 years, some people say it is 13 years. But in Tata Group profile, it is showing that he has 26 years experience in Tata. The chairman of the company is Mr. N. Chandrasekharan, age 58, and he got a bachelor degree in applied sciences and he got an MCA from REC which is now NIT Tiruchirappalli, and he also has 33-year experience in Tata Group. Shows that company is managed by highly experienced and qualified personnel. The company has a global presence in 4 continents, and information is available in annual report PDF page 17. And Tata Group has already signed an agreement with ISRO on lithium battery technology in 2016, and now based on that technology sharing, Tata Group is making EV batteries for electric cars. The company has 33 subsidiaries and 4 joint ventures. Information is available in annual report PDF page 39 and 184. Organization is headquartered in Mumbai, and the remuneration paid to the directors, which is 10 members, is less than 12 crores. On an average, below 2% of the profit is taken as director's salary. Shows that company is not mismanaged. If you go to page number 17 of PDF of the annual report, you can see the company's establishment in 4 continents: Asia, America, Europe and Africa. And you can also see the revenues and EBITDA, that is earnings before interest, tax, depreciation and amortization. And if you go to page number 184 of PDF, you can see the whole number of subsidiaries of this company, direct, indirect subsidiaries, as well as the joint ventures as well. You can also see the information clearly on page 39 of the annual report PDF document. As on 31st March 2021, company has 33 direct and indirect subsidiaries, 2 in India, 31 overseas, and 4 joint ventures. There has been no material change in the nature of business of the subsidiaries. And if you go to PDF page number 90, you can see the salary distribution of the directors. And the company has been founded in the year 1938, shows that 83 years of existence. Shows that company is very firmly established in the market. If you look at the recent quarterly financial performance, you can see the recent quarter shows that a net profit of 221 crores. But the previous quarter of Q1 2021 shows only 288 crores. But if you look at the previous year same quarter, you can see net profit of 70 crores. Now if you look at the year on year variation on quarterly basis, you can see it is 216% increase. That is Q2 2022, Q2 2021, there is 216% increase. But if you look at the quarter to quarter performance, you can see a 24% decline, which means the result is somewhat neutral, but overall it is very positive. This year dividend of 10 rupees is already issued on 14th of June 2021, and we are not expecting any further dividend this year. Going to the technical analysis part, you can see the 200 exponential moving average line is clearly below the price line, showing that the chart is bullish. But if you look at the 48 and 13 exponential moving average, you can see a negative crossover almost happened. That shows a bearish signal as well. Now if you are going to MACD is also in a negative territory but somewhat flatter. And if you look at stochastics, you can see it is somewhat bullish and it is near the oversold zone, so it is showing a positive indication. But if you look at RSI is not giving any clear indication. So based on the technical indicators, what I understand is share may go for a short term consolidation, but after that it will continue the rally. Now the same thing is mentioned here as well. 200 exponential moving average is bullish. 13 and 48 exponential moving average looks moderately bearish. And if you look at the 48 EMA, it may act like a support. We need to wait and watch. The current price is somewhat okay for long term purchases. MACD is negative but looking neutral as well. Expecting the share to consolidate for a brief period. Hence Q2 results came in moderate range, but better than the previous year. Share is expected to go up slowly. Now if you look at stochastics, you can see it is bullish and it is also near the oversold zone. So based on the technical indicators, price may consolidate and continue to go up. If you look at the breakup, you can see 37% is bullish, 27% is bearish, and 36 is for a neutral consolidation, which means share will consolidate for some time and it will continue going up. And I recommend follow buy on dip strategy for long term. Support can be found at 913, 885 and 834 levels. Any price around or below 915 will be a fair entry. Opportunity is mainly for medium and long term, and we are not talking about short term. Between 850 and 890 will be a much better entry. Minimum and maximum long term portfolio allocation is 2% and 4% respectively. That is, you can buy 2 to 5 quantities for a portfolio size of 1 lakh. Immediate target can be 982, medium term target can be 1100, and long term target is 1500 possibly. So if you found our video really useful, please like this video and subscribe to our channel. Thank you for watching. Bye.